Here we can see that the price action has been in a large downtrend. We can also see that a small consolidation period took place here, indicating that there is support at this zone. Along with this, we can see that the price action previously used this price level as support. Now we can see that the price is moving in the upward direction, indicating that it's a good idea to enter into the long position. However, once we enter into the position, we can see that the trade ended up going in the opposite direction. I'm sure that many traders have experienced this before. It seemed like a great entry, and still, it ended up going in the opposite direction. But there was actually something that gave away the fact that the downtrend would continue. What we are talking about is the inside bar. Inside bars are a common candlestick pattern that provides valuable insights into market sentiment and potential price movements. Even though inside bars are very common, many traders either don't know what they are, or don't know how to read and trade them correctly. So in today's video, we will be showing you exactly how inside bars can be used to enter into profitable positions. It's important to first understand what an inside bar is. An inside bar is a two-candlestick pattern where the second candlestick, known as the inside bar, is completely within the range of the previous candlestick. So in this example, we can see that an inside bar was made here. This is because this candlestick is within the range of the previous candlestick, also known as the mother bar. In this case, we can also see that an inside bar was made. This is because the candlestick is completely contained within the mother bar. This pattern can also be seen as the opposite of the engulfing candle pattern, where the previous bar is smaller and not contained by the next candlestick. Now that we understand what an inside bar is, let's take a look at how the inside bar pattern can be read. An inside bar can indicate different market conditions. However, the most basic way of interpreting the inside bar involves looking for an inside bar after a strong trend. In the case of a bullish trend, the inside bar indicates that the buyers are no longer interested in buying at a greater price. This means there is a high likelihood of the price either consolidating or moving in the bearish direction. For a bullish signal, the price will need to be in a downtrend. Then once the bullish inside bar forms, we know that the sellers are no longer interested in selling any further, showing us that the sellers are no longer in control, indicating that the price action will either consolidate or move in the bullish direction. The inside bars can also be used as a trend continuation signal. We can see here that our large uptrend was playing out. During this uptrend, whenever an inside bar pattern occurred that aligned with the uptrend, it shows us that the market is making a small pause, making it a good idea to enter into a buy position at these points. We can see here that a strong downtrend is playing out. Also during this bearish trend, we can see that when an inside bar occurred that aligns with the trend, the price action briefly pauses before continuing in the downward direction. Inside bars are also great when trading support and resistance levels. It's often difficult to know if the price will respect or break through a support or resistance level. However, inside bars can help us determine the outcome. We can see here that this long-term resistance level turned into a support level once the price moved above it. However, we can now see that the price broke through the support level after testing it multiple times. Despite this, we will not enter into the sell position. This is because we can see that after the price action broke through the support level, a bullish inside bar formed, indicating that the sellers are not interested in selling any longer, meaning that the sellers are no longer in control. Therefore, we know that the support level is still valid and that there is a high likelihood of the price action moving in the bullish direction. False breakouts with inside bars are one of the biggest drawbacks of the inside bar pattern. However, learning to avoid these and instead take advantage of these false breakouts is crucial to utilizing the full power of the inside bar. Here we can see that a strong uptrend is playing out. During this uptrend, we can see that a bearish inside bar formed. You may think this is a sign of a reversal and that we therefore should enter into a short position. But this isn't the case. If we look at the price action, we can see that there are no resistance points at this price level. We can also see that the price action is still respecting the higher low structure. Because of this, we will continue waiting for a better entry. We can see that right after the bearish inside bar, a bullish inside bar formed. This time the price action is at a support zone. Along with this, the price action is also in a large uptrend, making it a good idea to enter into a position. As you can see, by using confluences, we can avoid the false inside bar breakouts and instead take advantage of them. As you can see from the previous examples, it's important that we have multiple confluences to enter into a position. One of the easiest and most powerful confluences to have is the EMA, so let's add this indicator to the chart. Head over to the Indicator Search tab and search for the EMA indicator. Select the indicator made by TradingView and add it to the chart. Now we will be changing the color and the length of the EMA. We will be changing the length to 50. After that, we will be changing the color to yellow to make it more visible. That was all that we needed to do. As you can see by taking a look at previous examples, when we add the indicator to the chart, it can be used to easily determine the dominant trend. If we take a closer look at the price action, we'll see that the EMA also works well as dynamic support and resistance points. Now that we know exactly what inside bars are, how they can be read, and how they can be used, let's take a look at entries that can be made with the inside bar. We are currently looking at Euro USD on the 1 hour time frame. We can see that a large downtrend was playing out, however, the price made a reversal and started making higher lows. Now that an uptrend has started, we can see that the price made a pullback to the 50-period EMA. Once the price reached the 50-period EMA, an inside bar formed, indicating that there is a high likelihood of the uptrend resuming. Along with this, we can see that a fair value gap was created by this candlestick. The fair value gap was then filled when the price action pulled back to the 50-period EMA. All of these signals indicate that it's a good idea to enter into a buy position, so let's enter into the long position once the price bounces of the EMA. We will be placing the stop loss at the recent swing low. For the take profit, we will be targeting a recent swing high, aiming for a risk-to-reward ratio of at least 2. Now let's see how the trade plays out. Now let's take a look at entering into a reversal with the inside bar pattern. After a long downtrend, the price started moving in the upward direction, creating a bullish rally. However, it's rare to find reversal entries while the EMA also has an indication congruent with the entry. So in this case, we will look for a mean reversion. If we take a close look at the price action, we can see that there is a large divergence between the EMA and the price, making a mean reversion likely. Along with this, an inside bar formed, showing us that the buyers are losing control. Finally, if we look at the highest point the price reached, we see that it's right above a whole decimal, making it a psychological resistance zone. By drawing a box around this zone and looking at the past, we can see that this point has offered resistance before. All of these signals indicate that it's a good idea to enter into a sell position. So let's enter into a sell position here. We will be placing the stop loss at the recent swing high. For the take profit, we will be targeting a recent swing low, aiming for a risk-to-reward ratio of at least 2. Now let's see how the trade plays out. As you can see, the inside bar pattern is extremely versatile and can be used in many different ways to enter into positions. If you enjoyed the video, please leave a like and subscribe to the channel to help us keep making these free videos. If you have any questions, feel free to leave a comment.
Get the inside bar custom indicator in the description.